Hey everyone, and welcome to the PivotBoss Closing Report for March 1st, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Taking a look here at the ES. The key level that we were looking at the previous session during the closing report was 1921s. 1921 was very, very important. I talked about this was going to be the last ditch effort for the bulls to squeeze. And upon seeing rejections above 1950, upon seeing rejection above it 2 days in a row, price dropped into 1921 in overnight trading and bounced. And that was the saving grace. Again, this is the zone here where bulls have been defending over the last couple of passes at that area after going bid through it on a failed range expansion. And we've seen slingshot moves higher. That next push into it led to a massive short squeeze that was relentless throughout the session. Basically, program-driven short squeeze the entire session. And as a matter of fact, if you look at the PivotBoss quote board here, you can see that the ADR range for the day was 180% of average daily range for both the NQ and the ES. Anytime you get over 125%, it's an expansion type of day. But when you start getting over 175%, or 200% of ADR, average daily range, on a 10-day basis, that's when you know significant volatility is entering the market. And this also tells you that volatility will continue to pour into the market here over the next week or perhaps couple of weeks. So this is very important short term here because this is the first time we're seeing this. As a matter of fact, we've seen average daily range drop in the NQ from 147s on a 10-day basis down to 87s. That's a huge drop over the last month of trading. And so now to see a major move of 158 points, 181% of average daily range, that's huge. That tells you right there quantifiably that volatility has come back to the market, especially on this day. And that tells you that we could be looking at further volatility ahead. So that's very important how big of a move that was. And price pushed right through the previous week's high, 1968, and closed above that level at 77.25. I mentioned before that we were targeting 1990 to start the week early on, which was the primary bull target. But after price made a new low into 21s, we talked about 1983s being the primary target for the week. That target was almost reached in one session off that low. And now the expectation would be for a continuation into 2004, which is the secondary weekly target, with a likely push also into the 25% weekly expansion target at 2010. So here's the idea. If a pullback into 1950 occurs, that's a zone here where bulls want to keep bid for a continuation and a squeeze higher. As a matter of fact, any pullback could be a solid buying opportunity as long as price doesn't drop back below the previous week's close. That likely implies a continuation to the upside. Something similar happened recently where we saw a huge session here after a push higher, and it occurred back here during this time frame right here. You can see price rallied off a low here significantly. That's kind of what we saw here. And then the first pullback here was bid, boom. That's kind of like this one here, first pullback bid. But right here is where you see a couple of sessions where we saw some rejections and a push downward. And then on this session right here, a massive squeeze to the upside. Very reminiscent. I mean, this 4-day pattern here, very reminiscent of what happened here. You can see how it played off from there, where it continued higher over the resulting week or so after that move. So again, we may not even see a pullback, but any pullback, perhaps even as shallow as 1968's, offers an opportunity to defend for a continuation higher. So this is a major squeeze. I talked about before the fact that the ES here has bounced off of 1814s. We talked about this mirror image type of pattern here, which I don't really discuss often. But the fact that we bounced off of here on a second retest really had kind of a look like we saw before, where this thing led to a big move back. We could be looking at the same type of thing where this thing marks all the way back to the top of the key range at 2075 and the HVN here at 2071. So that could be a huge move ahead if price can continue to hold above 1950 half. This is the first closing price we've seen above 1950 half since basically early in the first couple of sessions of the year. So on the third session of the year, that's the last time that we've closed above that level. Everything else has been way below it. and now we're into March. So that's a huge reversal, a major squeeze. Pullbacks should be defended for a continuation into 2004 and 2010. Once we reach that zone, we may begin to see a little bit of profit taking, but overall this thing could continue to squeeze higher as long as 50 half remains intact. Now if we look at the intraday time frame here for the ES, what you'll notice is how price just squeezed significantly throughout the session, just a big time push. But early on, there was a narrow range here. This narrow range kind of materialized after the 30-minute opening range was broken to the upside. First pullback was defended, and this thing marched higher into the previous week's close and above 1970, our key level. Just a significant push higher. Again, the expectation here would be for any pullback to be defended as shallow as 1950 half, but perhaps we won't even get that far. We'll see how much of a pullback we see overnight, but the expectation would be for bulls to defend. Right now, 1956 half looks like a pretty decent area that if price drops into the zone, it could be a solid buy opportunity for continuation higher. Again, I don't know if we see that much of a pullback, but again, we should be looking to defend pullbacks for continuation into 83 and 2004. Now, if we look at crude oil was rather quiet today, only traded 63.5% of average daily range. It's been averaging $2.19 of range over the last 10 sessions. Today was only $1.39. So 63% of average range. That implies a quiet congestion type of range. Usually what follows after this is expansion. Right now, prices are holding above composite VPOC, which is shifted up to 33.44 from 32.60s, I believe. And now what we're looking at is price holding above that level and also short-term above the previous month's close price. We also see 34.63 remaining resistance right now. That's the midpoint of the key range, which spans from 40 half down to 28.76. So right now, we see higher lows here, we see lower highs here, and this thing is squeezing. We now see price just holding on 33.44 to 34.63. That right there is basically your range. It was the range for the day, and now that's the range to watch for expansion ahead. If price can push beyond the previous week's highs of 34.60s here, we could be looking at a continuation into 35.81 and perhaps a move all the way back into MCVPOC above at 37.81. So this could be a solid squeeze event if price can push and hold beyond 34.63. Otherwise, be looking for some sort of trap here, because if price pushes above that zone and fails, the expectation would likely be that price auctions through 33.44 and back to the bottom of value at 30.48. That's right where bulls are defending, so any move across the range in this profile likely offers a buying opportunity back up. So that's kind of the range to watch right now. We have this clear, balanced profile. We're in the upper zone of that profile, so typically speaking, bears want to defend and return price back down, but any squeeze beyond it likely runs those buy stops up into the next upside targets, with a primary weekly target at 35.48 and a secondary at 36.53. Looking at the intraday time frame for crude oil, you can see it was kind of quiet early on, and then we had a big push downward that led to some action here. Eventually, that led to a short squeeze back up, and then the session's open price held as support. So just kind of a workaround here where this thing is just bouncing between 33.34 and that 34.68 key level. Those are the zones to watch in overnight trading for any type of expansion. Again, any pullbacks likely to be defended at value until proven otherwise. Now, taking a look at gold futures here, you can see gold futures basically holding right on that midpoint of the key range at 27.70. That was basically the low of the day, and we also saw another rejection above that 1245 zone. 1245s have been very important. I've mentioned before that we haven't seen any acceptance beyond 1245s, and it's kind of keeping a cap on price right now. This thing is kind of coiling up toward an apex here, and we could see this thing eventually see significant expansion out of this range. Basically below 1210 and above 1250 opens up likely the next near-term expansion opportunity to the edge of the range and perhaps outside of that range. So let's take a look at the intraday time frame for gold for a moment. One thing that was important here, we were watching how price basically formed a lower high this morning in the trading room. We were watching that, and I mentioned a break of this support level opens up a push into the primary bear target for the day at 1228.90. After we reach that level, prices basically just held in this range. So it's kind of a clear little range here above 1238, squeezes back toward 1245 to 1246. Failure to get above 1238 opens up a likely push into 1225 and that 1210 key level down below. Let's take a look at the NQ now. The daily time frame of the NQ shows a significant squeeze event, again very similar to the ES here. This one held on the moving averages. So I talked about the changeover of the moving averages here and how price pushed above it, made it support and rallied, and it came back right to that zone. And I mentioned between 4170 and 4180 was where bulls were defending. Again, very similar to the ES, a last-ditch effort to see a potential squeeze, and that materialized in big-time form. Because up until then, we saw rejections here, and then we saw a rejection off the previous month's close price. Obviously, we have new key levels here for the new month, and you can see the previous month's close here, 4190s, or actually that's 4201. That area bid immediately and pushed higher through the previous month's high price of 4309. That implies a likely continuation into the next upside key levels. We have a full range 100% key target at 4403 and 4421 as the next upside key targets ahead. So very similar to the ES, a pullback likely in the 4287 or as low as 4260s offers an opportunity for price to be defended by bulls for a push up into the next HV and above at around 4400. Looking at the intraday time frame for the NQ, this one was significant because it was very apparent early on that the NQ in the tech sector here was leading the march higher. You can see how aggressive this short squeeze was throughout the session here. This early range right here, that breakout to the top, was significant. We pulled back, and that first pullback was defended. And then what we talked about in the room was how the third standard deviation VWAP here held as support. We were looking for that area to hold as support the rest of the session for squeezes, and that's kind of what we saw. Just a significant short squeeze here in crude oil, rather the NQ through the previous week's high of 42.93s. Again, any pullback likely offers an opportunity for bulls to defend for a continued squeeze higher. Again, we don't know how far or how deep that pullback will be, but overall, we need to be looking for some sort of overnight weakness or perhaps early RTH weakness for some sort of buy the dip type of opportunity for a continuation into the next upside targets, which we have at 43, 47.5, and 44.03. So ideally, price will likely continue to squeeze toward the next HV and above, which is 4400. All right, that's it for now. Let's see how this thing plays out heading into the upcoming trading day. Good luck and trade well.